What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is February 12th of 2024. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, we've got to talk about how something big has just happened here for crypto markets. I not only want to talk about Bitcoin's price action over the last week, as we saw a 13.4% move in its price, getting back up relatively close to where those relative highs were from the ETF launch. But outside of that as well, we got to talk about the inflows. Something big has changed over the last few days, and it's something we need to keep on our radar to determine whether or not there's going to be some major opportunities in the altcoin space. We got a lot to unpack here in today's video, so if you happen to enjoy it, consider dropping a like. We also have a sponsored review of Trakx, a really interesting index investing platform in the crypto space, so stay tuned for it. You guys won't want to miss it. All right, let's go ahead and kick things off here, guys. So I want to start here by talking about the fundamental reason why Bitcoin made the move that it did this past week. As some of you might have seen in our previous video, we focused on the bulk of the move here for the past few days, and I want to focus in on why it's not only made this move, but also why it's holding up here. For the last few days, back last week, we saw a continued ascension in the amount of Bitcoin being stored in ETP products. Now, the big differentiating factor here is that while we have seen inflows, generally speaking, into these ETP products, the big problem was that there was consistent outflows in GBTC, and we've pointed this out on the channel for a long time. This has been what's been holding back the ETF from being the kind of catalyst that many people expected it to be. And a lot of that capital coming out of GBTC, while there's been misconceptions that it can't rotate into other ETFs that have been launching on the market, like the IBIT or iShares BlackRock Bitcoin ETF, that's actually false. They can rotate. So this was a big reason why when you would see outflows coming out of GBTC, you'd also see these big surges of inflows. But the main point I want to get to is that for many days here, since this ETF has been created, there have been many days where ETF flows were either negative, practically indifferent, practically near zero, a couple hundred Bitcoin per day. And that isn't enough really to get people excited. However, something big has changed here, guys. And again, I'm not saying that this is guaranteed to continue happening here over the next few weeks and months, but we see here very clearly since back in February that there's not only been substantial days where we're getting in around 1,000 to 2,000 Bitcoin, but over the last few days, even considering GBTC flows, if we take a look at the total for all ETFs number here, we can see that back on the 7th, we had 3,000 Bitcoin coming in, 8.5 thousand on February 8th, and 12,000 Bitcoin coming in last Friday. Now, this is the kind of ETF flows that gets me at least interested. It gets me interested in the reality that there might be some institutional capital that's interested in crypto markets. Now, I want to be very clear here, guys. There is a little bit of mania going on here across assets across the board. So I don't want ourselves to get lost in it. I'm not saying here to go all in. I'm not saying you need to FOMO. I'm just saying these are the kind of inflows that definitely get me a bit more interested. Because if we can continue on a 7-day average to maintain these strong inflow numbers, even just maintaining somewhere around an average of say 3,000 to 4,000 BTC a day, that's not a negligible number. That's a significant change in the dynamics of inflows and outflows on a daily basis. And when you match that with the halving and you factor both of these things on a new annualized basis, that is going to change the dynamic and allow for price to probably accelerate, even in an environment of potentially contracting liquidity over the next few months. We don't know where monetary policy is going to take things. However, while these inflows are definitely impressive, and the price action from the past week on Bitcoin is definitely notable, as you all know, as we talked about in this channel for the last few months, our focus here is on altcoins. We are not just looking to make a 50, 100% move here. We are looking for the plays that can multiply many times over the next few months. And we're looking more particularly for altcoins that are focused on the Bitcoin narrative, specifically Bitcoin infrastructure plays like Stacks. And guys, take a look here at this chart. One of the longest trading pairs we have when it comes to history, about 4.5 years of price action for Stacks against Bitcoin. With higher lows building up over time and lower highs, we have got a clear wedging pattern within price. And I have to tell you guys here, whereas we've seen back in the past, Stacks usually starts to drop significantly when it comes up against this line of descending resistance, we are seeing a minor pullback that has not even snapped or come close to snapping our momentum indicator and has built up back strength here over the past week. It outperformed Bitcoin by 11% in a week where Bitcoin was already doing 13% of price action. That's the kind of stuff I want to see. Now, I know a lot of people would say, well, don't you want to buy on a dip, Nick? Don't you want to buy at a discount? Because the thing here is that we're talking about if this breaks through this line of resistance, really for the first time in history here for an actual weekly close, we're entering into no man's land here, right? We're basically entering into uncharted territory for price action where this could really start to expand. Not to mention Bitcoin as an asset could also be expanding during that period of time as well. We don't know exactly how far it's going to go here, but my point is that overall, there's a good asymmetric opportunity here where you don't need to go all in with your capital, you don't need to go in excessively, and you don't need to just hodl and just wait. You can set standards here. If you, for example, break below a certain moving average, or for example, you set a stop that's 10, 15, 20% below your current entry, that's fine. You can assess that risk and make sure that you actually have a clear risk-reward profile. But afterwards, you've basically got this upside potential that is far greater and essentially could continue to expand here in an environment where Bitcoin continues to expand in its price. All right. So again, as someone who has been mainly in cash, we've made some crypto positions. We've started to dabble a bit more in the market. We made some great returns on altcoins over the past month. I think that there's a chance here that we could go in heavier and we could be able to ride this wave over the next few weeks. The thing I'd like to see, though, is a weekly close above this line. This is just one of many altcoin plays, guys. There's other different types of Bitcoin infrastructure plays. There are definitely other narratives that could still benefit, even that aren't related directly to Bitcoin. But I have a big focus here on Bitcoin infrastructure because it is the probably best risk-reward setup here when it comes to the upside potential of being in an altcoin position in this environment. An environment where there's not a massive expansion in the money supply, yet at the same time, liquidity, globally speaking, is not significantly shrinking. I want to go ahead and talk about that topic of global liquidity in a moment, but I want to let you guys know that if you are looking to trade stacks, if you're looking to trade in cryptocurrencies, I definitely recommend at the end of the day, guys, that you have a CoinLedger account. Not only to prepare for next year's tax season, but I know many of you also who are in the United States and other Western countries, you basically have to start prepping here for tax season going into April. This is a period of time where a lot of people are starting to prepare for their taxes, and unfortunately, a lot of people don't know how to go back and backtrack all those different transactions to know what their tax obligations are. And in many cases, sometimes tax write-offs that you can benefit from. If you've had losses in 2023, in the fiscal year, then you might be able to write those off here in 2024 when you're paying your taxes for the last year. So make sure to essentially go back, try to plug in all of your exchanges. You can utilize CoinLedger for free. They're an official TurboTax partner. They've got great portfolio tracking tools, so you can even just utilize them as a core tool to track your portfolio. But the main point here is that if you guys are preparing for tax season, don't go at it alone. You can plug in all your exchange accounts, plug in all your wallet addresses, and get a full 360-degree picture of your tax obligations, whether that's income or capital gains or losses. It's definitely something I recommend doing. You guys can check out the link down below and get 10% off when you sign up for one of the plans on CoinLedger. And again, you can try the platform for free. It's only when you want to generate your tax forms that you have to pay for. So definitely check out the link down below in the description. Let me know what you guys think about CoinLedger. But I want to go ahead and get into this bigger topic here, guys, because while I've definitely been of this narrative here that, I don't think we're going to get this massive sizable bull market, let alone anything like we've seen in the past, I will say at the same time, it doesn't mean that, as we've discussed before, relief rallies or movements in price can go on for extended periods of time. And while I think we've definitely seen a substantial move here in total market cap terms, we have gone up from around 730 billion to 1.74 trillion. Right, so we've seen a 145% move here. There is that opportunity for this to just continue expanding for a little while. I don't know how dramatic. I certainly don't think it's going to be anything like we've seen in the past. And as we can see here, for example, from 2015 to 2018, and here between December 2018 to November 2021, we had a 1/10 reduction in the performance here. And I would say that at a minimum, as a maximum here, we'd probably expect to come back to all-time highs in probably the more bullish case scenario here for Bitcoin. I think the only case you get something much greater than that is if you have a massive resurgence in inflation. You see the Fed, for example, printing money en masse alongside other central banks. and essentially devaluing its currency to a large extent, maybe to fund the fiscal deficit. I don't see something like that happening here over the next few months. That's a very low probability scenario. But I think that there is a realistic case here to be made for Bitcoin potentially coming back up to those highs and getting potentially a third triple top here. We had one back here in April 2021. We had one here in November 2021. Perhaps you get something around that $3 trillion mark, maybe a little bit higher here in alignment with those prior highs in the past, mainly led by Bitcoin in regards to that overall market cap acceleration, because that's where the institutional liquidity is coming in. Right. When we take a look at global liquidity and our metric here, we can see that overall the trend has been relatively stagnant here. We're not seeing some massive expansion. However, it depends on how you look at it. We also factor in whole things such as the reverse repo. We count in the Treasury General account. These are other different types of means where the Fed has been able to stimulate financial markets. But more directly, in measuring M2, money supply, we can see here that money supply, globally speaking, has been relatively flat since back in April 2022. And I think it's important here to track the M2 metric, because what we are seeing here is it seems like equities more directly have been following this M2 metric. They started to rebound here when we saw an expansion from October to November 2022 into 2023. And now as we're seeing a re-expansion here in November and December 2023, up from around $84 trillion up towards $87.2 trillion. This is where I'm keeping my eye on now. M2 seems to have much more relevancy here, globally speaking, versus tracking in some of the additional things when it comes to the performance of asset prices. We've seen a direct correlation here to a large extent with asset prices during these months. Crypto had some of its best months in November and December with the continued expansion of Bitcoin, but also in altcoins. And this also leads me to just, again, hitting on the topic here of altcoins in the near term. Altcoins overall by market capitalization are only up 77%. They went up around 4,000% in the last cycle from bottom to top. So my point here is that I can definitely assess here that there is a good position or good setup where essentially if we nail the right picks, if we nail the right plays with the right narratives, especially those directly tied in a sense to Bitcoin, so Bitcoin infrastructure plays, then there's definitely a really good risk-reward setup here where you can put a portion of your portfolio, of your net worth, into Bitcoin-related plays and be able to just essentially ride the wave here on them with, of course, some means of risk mitigation. So you're not just, accepting that it might go to zero. You don't have to do that, right? You can set a nice preliminary stop loss from your entry. But I have to tell you guys, this to me looks really exciting here. When you consider total 3 divided by Bitcoin's performance here, you can see that overall, we're not overbought by any means. We're not overbought like we were back here in May of 2021. And while there's a chance here that Bitcoin initially runs up, and for example, we see total 3 dropping down here, another couple dozens of percentage points here against Bitcoin. While there is an opportunity for that here, I'm not seeing the same kind of momentum just yet. So again, either if you're in Bitcoin or Bitcoin infrastructure plays, I think you're going to be positioned pretty well here in this environment. There aren't many altcoins out there out of the sea of layer ones and different plays out there that I'm really too interested in. I'm interested in Bitcoin infra plays. And again, while there's an opportunity to come down to this range, like we saw in 2017, like we saw in 2019, like we saw in 2020, again, I think this is a period of time where building those Bitcoin-related infrastructure plays makes sense, especially if you've got a chart like this. That's where I get interested, because I think it's either going to hold up against Bitcoin or it's going to outpace it. And for me, that's what I care most about. I want to maximize returns on cycles. Now, while we talked about that here, I want to go ahead and emphasize one big thing, guys, which is to not get carried away. Now, the great thing here is that we can make some really phenomenal turns in altcoins in a matter of a couple of weeks, a month or two. It really doesn't have to be that long when you get an altcoin cycle or when you get the right plays in your portfolio that are leading the market. And I think the big thing I want to emphasize here is that while there is that short-term window of opportunity and we don't want to definitely miss out on it, we want to ride the wave, I want you guys to keep in mind the broader macro perspective. And the only reason I say this is because it's very easy to get caught in the micro and macro. It's been one of the biggest mistakes I've made in the past. For example, in 2023, we focused a lot on the macro, right? We focused too much on trying to track global liquidity. We stepped a bit away from our technical analysis on chasing momentum, following price action, which is probably equally, if not even more important, because it's the actual core performance of the asset price. But the other thing here is that we don't want to get caught with our pants down and completely lose track of the fact that, the yield curve on a grand scheme of things since back in July is starting to uninvert. This is the initial stages before a recession, and we have been uninverted, the likes of which we have not seen in decades in the United States. The last few years, we were living in la-la land. Money was absolutely cheap. It was being printed out the wazoo. And eventually, the chickens will come to roost on that. A significant downturn will be needed. We are far away from 2% inflation. Inflation is now bumping up month over month. We're at around 3.4%, if I'm not mistaken, on an annualized basis. That is far away from where the Fed needs to get it to at 2%. Not to mention, what people don't tell you is that it needs to get below 2%, and it needs to potentially even be deflationary for a month or two before we can actually remain sticky at 2%. All right? And the Fed is kidding itself if it thinks that it can really start significantly cutting rates at this point. But it's giving the markets what it wants in the short term, and it's unfortunately going to have to deal with the pain. Actually, not the Fed. We're going to have to deal with the pain eventually. There will be a painful period of time where the mania ends in AI and in crypto and all the narratives, and eventually it's going to have to come back down to earth. Now is not the time, though. Right now, as much as we are building up here, we are still below the 200 week. So this could give us, as we've been chopping here since back in October, and really since back here in August 2022, looks like we've got some time to potentially make some last-minute returns in the market. Potentially some really big ones, as we're probably entering into the mania phase here. And it's not just in crypto. It's in the S&P 500, breaking to new highs here, continuing to climb up here, week by week. The NASDAQ, looking like it's ready to break new highs here against its November 2021 highs. Again, I don't think this is shaping up for another bull market. It's not just me not wanting to say it's a bull market or anything, but to be honest with you guys, I don't know if I got that feeling, going into a period of time where, one of the most consistent recession indicators here, the yield curve, is uninverting. And it is now getting back to normalization, which is not good for the overall outlook of the economy and the future outlook of equity performance. Historically speaking, it's one of the most consistent indicators. But right now, the price action is strong. The technicals are good in the short term. And we can't fight that, right? So in the meantime, we buy on dips, we ride the wave, and we try to figure out where the best performance is right now to maximize returns, right? You can see Bitcoin's trend strength is strong here. We just had a month, 2 months of consolidation, met with 1 week that just led prices surging here, right up towards around 48K. Again, I don't know how far it's going to go, guys. I don't know if this could be short-lived momentum. It could be some form of distribution. I always keep that in mind. But the big thing is that we've got our plays here in the market where it can make sense to risk some capital. You've got the momentum there. You've got global money supply, which is remaining relatively neutral over the past few years, not seeing the kind of contraction that I think we need in order for inflation to go down. But just because there's inflation in the economy doesn't mean that you can't live in la-la land when it comes to the performance of assets. So my big point here, keep your eye on those plays that are really holding up here in the market. If we get that weekly close above that range for stacks, that's where things could get really interesting. And not just for stacks, but potentially other Bitcoin infrastructure plays and other strong narratives in the market. Speaking about all these different narratives, I want to spend some time to talk about Trakx here today, because Trakx is a platform that's aiming to allow you to simplify crypto index investing, not only into the broad, large plays in the market, if you're looking to just kind of have a broad exposure to the crypto space without picking individual plays, but outside of that as well, into particular narratives, ones of which we've talked about here in this channel. So let's go ahead and kick things off. Alright everyone, so in today's sponsored review, as I hinted earlier, we are talking today about Trakx. Now for those of you who are hearing about Trakx for the first time, Trakx is one of the leading platforms in the crypto space that allows you to invest in tradable crypto indices, or CTIs, that allow you to essentially invest in a wide range or basket of cryptocurrencies tied to particular labels or standards, such as being the top 10 largest cryptocurrencies, or investing in particular narratives or focus points, such as meme coins or DePIN, and a whole range of other narratives that we've even discussed here on this channel. Now, I want to go ahead and before we dive into the Trakx platform, I want to spend some time to showcase some of the ranges of opportunities that you can invest in and what Trakx is really all about here by diving into the platform. The big thing I want you guys to know about here is why index investing or investing in crypto indices may very well be the option that's right for you. As many of you know on this channel, we sometimes talk about markets and we talk about trade setups and how to generally kind of time the market. But one of the true factors at the end of the day is that for the overwhelming majority of participants in the crypto space, you'd likely be better off having a diverse exposure to the crypto space and not trying or attempting to trade the market 24/7. Now, with indices, you can trade them as well. You can get in and out and try to time the market if you want. But the main thing here is that it's good to have a broader index exposure to the crypto space, very similar to equity markets, because when things get moving here, you want to make sure that you have a broad array of exposure and you don't just pigeonhole yourself into one particular cryptocurrency. We mentioned stacks, for example, earlier, but that's tied to a broader narrative in which we're much more interested in. It's not just stacks as a project, but we're interested in Bitcoin infrastructure. It's not just, for example, Bonk or Pepe or Dogecoin. It's meme coins that we're interested in because memes are incredibly viral and they've been some of the top performers from this year. DePIN is a narrative. While we like networks like Render, which definitely lead in the DePIN sector, we also want to make sure that if there's a new play that might be smaller or larger that starts to really take off, we want to have exposure to it. We want to have a decent range of exposure to these plays. And that's why if you're passively investing in a broad range of indices, you can do a lot better than just trying to pick one particular play. So this is something that I think, again, is going to service a lot of people. Statistically speaking, you are better off doing this than trying to go out there and trade cryptos individually, especially hodling into one particular play. Now, let's go ahead and talk a little bit about how Trakx functions. Trakx is incredibly simple here, guys. Unlike trading platforms that focus on various different order types and adding a ton of complexity to the process, Trakx is focused on giving you a few click solution to being able to get exposure towards a whole range of cryptocurrencies. So let's go ahead and go through the sidebar here. This is where things get really interesting. So there are simple access indices. For example, investing in a particular price performance of an asset like Bitcoin, investing a 50-50 split between Bitcoin and Ethereum if you want to start taking a little bit more risk into the altcoin market as someone who's maybe been more traditional. You can invest also in the top 10 cryptos. And of course, it's important to understand that this is rebalancing. So essentially, you're getting a rebalanced portfolio that is done automatically for you. So if new coins move into the top 10 that have been better performers, that are starting to gain traction on market cap, then in that case, it's going to rebalance into those plays rather than holding the prior 10 largest cryptocurrencies. So important nuances to understand. That's a good thing because you want to be able to hold the top 10 large plays that are at the top of the leaderboard. But outside of simple access indices, there's also thematic ones. And this, to me, is the coolest thing about Trakx because there are not many platforms out there, whether you're talking about Coinbase, Binance, you name it, all the major exchanges, Kraken, there is no easy way to get a simplified index on a lot of these narratives and really remove a lot of the barriers from entry by exchange listings, etc., that can really hold you back from holding some of the leading plays. This is really cool. For the thematic different themes they have artificial intelligence, they have centralized exchanges, so you can hold centralized exchange tokens for leading exchanges, but also AI-related narratives, those who are focused on AI as a technology, or those who are focused on DePIN, providing the infrastructure for narratives like AI and other different types of decentralized physical infrastructure networks. There's also exposure to direct decentralized exchanges, the ESG narrative, if you want to play on the institutional narrative around that, interoperability, lending, top blockchains, top 10 DeFi projects, Uniswap and Compound, and even down to newer themes like memes and real-world assets, and proof-of-stake networks. I could go on here. The possibilities here, depending on the narratives, are endless. And the thing I really like about this is that it's all from within one platform. I don't need to bounce between multiple exchanges. I don't need to constantly trade in and out. There's constant rebalancing on these portfolios, and they essentially allow me, through a few clicks, to be able to get exposure towards a whole range of different cryptocurrencies. I think being able to have a broad exposure to the meme coin industry within crypto is essential, because at the end of the day, you can see some substantial moves here in altcoins. But the problem is if you're focused on the wrong plays here, if you're too isolated on one particular altcoin, you're going to miss out on a broader move here in this trend. You might get the narrative right, but if you're exposed to the wrong coin, if you have all your eggs in one basket and it doesn't seem to be the play that really takes off, you could have missed on a broader index move, where this made a 34% move from the 22nd of October up towards around the 30th of November. In practically a month, a 30% return. Not bad if you can get it. And this is, again, where index investing can put you in a better position. Now, I want to talk a little bit again about some of the other narratives here, because I think, again, the platform itself is relatively intuitive. As you can see on the right-hand side, we can go through, we can buy and sell indices here. But the big thing here is that there's also more opportunities here. There are also smart investing strategies that go beyond just passively investing in the market and apply particular trading or hedging strategies when it comes to your exposure to the market. There's the digital inflation hedge, which is made up of half Paxos gold, so you have some gold exposure, but beyond that as well, exposure to what they call Bitcoin Control 15, which is a strategy for trying to essentially take on additional risk here and hopefully increase or outpace the general position of just holding Bitcoin. But beyond that as well, a whole range of other things like their diversifier strategy and risk profile strategies here that go on a more balanced approach, more conservative or high growth focus, and even a focus on staked assets. So you can have exposure to not only the price performance of an asset, but an asset that is staked. So hopefully benefiting from the appreciation of that as well. So this is, again, I think, a really cool range here. You've got a whole range of different indices here, and you don't have to put all your eggs in one basket, ironically enough, not just with one crypto, but also with one narrative. I think it's good to have a broad exposure to some of the ones we've talked about this year. Things, for example, like meme coins, DPIN, AI as a narrative. These are definitely the hot areas here beyond just Bitcoin infrastructure as well. And I hope to see maybe in the future, maybe they will offer as well a Bitcoin infrastructure play here as more and more come out into the market. It's really an isolated sector. But again, this can help you to streamline a lot of that process. And the great thing about it is that once you have these positions, the portfolios are giving you exposure towards a whole range of crypto assets. These crypto baskets are set up for you. There's a whole range of different indices, and the rebalancing is done for you. So you don't have to constantly trade in and out of assets, accumulating fees, wasting time, all the kind of stuff you'd have to do through a traditional exchange. It's all done for you in a simplified fashion. Now, the really interesting thing I want to bring your guys' attention to is that Trakx has been around for a little while here in the crypto space. They've been continuing to perfect this platform. They're compliant with regulatory authorities and offering these services. They're doing things by the books. And on top of that as well, they've got a really powerful team behind the project. They have people who have worked at large companies like Fidelity, Goldman Sachs, BNP Paribas, Bloomberg, just to name a few. And on top of that as well, they also are helping with the MSCI when it comes to their variety of indices. The MSCI is a huge entity when it comes to managing or creating indices in the traditional equity markets. And I think that this, again, speaks volume here about how Trakx is stepping into a relatively new space in crypto, offering this ability to get broad indices on crypto-related assets, not just equities. So this is, again, a really interesting platform overall. From a fundamental basis, I think that Trakx has an ability to continue expanding the UI, and overall experience is just really simple. And I have been waiting for crypto platforms to offer something this simple to get a broad array of exposure to the crypto space that doesn't require all the heavy lifting. But outside of this as well, they also are having a token raise come up in the future. So I'll leave some links down below in the description so you guys can learn about it. I think Trakx overall as a platform has done a phenomenal job in building what it needs to build. And I think that there's definitely a need for this platform as there's a broader wave of adoption, both for retail but also institutions who are going to demand that broad exposure beyond just investing in Bitcoin. So that's it for today's video, guys. Check out the links down below in the description if you're interested to learn more about the platform. Thanks so much for tuning in. And if you enjoyed this video, consider dropping a like. It's a great way to support the channel. Take care, everyone. I'll see you guys on Wednesday at 6 a.m. Eastern Standard Time.